Then guys, section 48 talks about the computation of capital gains. So before computing the capital gains, our first task is to classify whether the capital asset is it a short term or long term. Why so? Because short term capital asset, if I have transferred, I have to compute short term capital gain. And if I have transferred long term capital asset, I have to calculate long term capital gain. And sir, any gain is gain, no sir, calculate something. No, there is a difference. For long-term capital assets and all, there is something called as indexation available. But from 23rd July, Madam has removed it. But few selected assets still available. Okay. Whereas the tax rates are also different, guys. On short-term capital gain, the tax rates are different. Long-term capital gain, the tax rates are different. So it is very much important for us to first classify whether the capital asset is short-term or long-term. How do I classify it, sir? Based on period of holding. Sir, what is period of holding? It is a time gap between the date of purchase till the date of transfer, guys. Clear? How long did I hold it before I sell or before I transfer it? So there are two set here, guys. That is, I have divided long term and capital as long term and short term capital asset. See, there are three category here: 12 months, 24 months, 36 months. Three set of assets they have categorized it. If I have held the respective assets for less than or equal to 12 months, 24 months or 36 months before the transfer, we call that asset as short-term capital asset. And when it is transferred, I need to compute short-term capital gains, guys. And short-term capital gains on the transfer of EFT. You're already familiar with this. What is EFT? Equity shares, units of equity oriented fund, units of business trust. Then it is covered under section 111A, which is taxable at 15%, or now the rate is increased to 20% from 23rd July on the entire amount. On the entire amount. And if the short-term capital gain is on the transfer of any other asset other than EFT, it is always a normal income taxable at normal rate. It is not a special income, guys. Then coming to, sir, what if the asset is held for more than 12 months, 24 months or 36 months before the transfer? Then we call that asset as long-term capital asset. And when it is transferred, we have to compute long-term capital gain. Now, if there is a long-term capital gain on the transfer of EFT, it is covered under section 112A. It is covered under section 112A, which is taxable at either 10% or now the rate has been increased to 12.5%, but only on the gain in excess of 1,25,000. Means up to 1,25,000 it is not taxable. Yes, sir. Sir, what if there is a long-term capital gain on the transfer of any other asset? Even that is a special income. Even that is a special income, which is taxable under section 112. At what rate, sir? 20%, or now from 23rd July, it is 12.5% on the entire amount. On the entire amount. So now if you ask me, sir, all these are special incomes? No, only three of them are special income, guys. Three of them. Whereas this is not a special income. It is taxable at normal rate as applicable to the associate, guys. Yes. Now you told, sir, what is this period of holding? 12, 24, 36? A bit confused, sir. Where, which asset, how much, sir? We will see that. Guys, classification of capital asset into short term or long term depends on the period of holding. And the period of holding I am categorized into two categories here. That is, if the transfer has taken place before 23rd July or next 23rd July or after. Okay. If it has transfer has taken place before 23rd July, guys, that is from 1st April of our previous year to 22nd July. How do we decide whether the asset is short term or long term? So there are three set of assets, guys. You can observe your three set of assets. You have to remember them. First set, listed securities, both equity, preference as well as debt on a recognized stock exchange, unit of equity oriented fund or unit trust of India, zero coupon bond. If these three assets are held for more than 12 months, long term, less than or equal to 12 months, short term. Then second set, Unlisted shares, only shares, equity and preference. Sir, what if it is unlisted debt? It will come here. Other than shares, please be careful. Unlisted shares, equity and preference, then land or building or both, which we also call it as immovable property, guys. For that, the period of holding is 24 months. If you have held it for more than 24 months, long term. If not, short term. Then all other assets, remember this too, enough. All other assets falls under 36 months. All other assets. Then why you have named a few of them? Because students might get confused. That is why I have just named a few, guys. Clear up? Because what happens now, listed shares, listed shares are covered here. Sorry, listed securities are covered in first category. Whereas unlisted shares only is covered in the second. Whereas any other unlisted securities other than shares will fall in last. Then units of equity oriented fund is covered in first category. Whereas if it is a debt oriented fund, it will fall in last. Then units of business trust specifically I have given. Why, sir? It is a part of EFT. It is a part of EFT. In my EFT, which is covered under section 111A and 112A. Guys, observe 111A and 112A covers only three assets. What are those? EFT. E and F will fall here. Whereas T will fall where? Last category. Clear? So to decide whether it's short term or long term, please be careful. E and F 12 months. For T it is 36 months. Okay, sir. Now it is easy. Madam has made it easy. In case of transfer takes place on or after 23rd July, that means from 23rd July to 31st March. Sir, what is the period of holding? How do I categorize the asset? Only two categories. Remember first one, rest all will fall in second. 12, same assets, guys, same assets. Whatever three assets were there, na, same three assets. Listed securities other than unit on a recognized stock exchange, unit of equity oriented fund or unit of unit trust of India, or zero coupon bond. Zero coupon bond, same three assets which had 12 months here, same 12 months here also. Then all other assets 24 months, guys. If held for more than 24 months long term, less than or equal to 24 months short term. That means on or after 23rd July, they have clubbed both of this. They have clubbed both of this and they have made 24 months. So before 23rd July, three set of assets. On or after 23rd July, two set of assets, guys. Next, there are three assets which are covered under section 50AA, guys, for which we always compute short-term capital gain or short-term capital loss. Which are those assets, sir? Units of specified mutual fund acquired on or after 1st April 2023, then market-linked debentures, and now one, previously these two were there, now one more addition. Unlisted bond or unlisted debenture which is transferred or redeemed or matures on or after 23rd July. On or after 23rd July. Yes, sir. There's an addition. Please be careful. Only if it is transferred on or after 23rd July, it will come here. Sir, what if it is transferred before 23rd July? Decide based on period of holding.